Good evening and welcome to this session of the live virtual classes organized by the Board of Studies of the Institute of Chartered Accountants of India. So we have made progress in the awareness about corporate and other laws, especially Companies Act 2013. So today we are going to take up topics which are related more to finance, especially accounts. So the first topic would be declaration and payment of dividend. Then we'll also talk about accounts of companies, then auditors. All three are interconnected, right? You need your accounts to find out what is your profit. Then you will declare a dividend. Link. The accounts have to be audited. So link. There's a link to the top. Dividend. Okay. So we are talking about two topics, the two concepts, declaration and payment. Declaration is when the shareholders in the annual general meeting approve the dividend recommended by the board of directors. So it's a dual process. Okay. The board of directors cannot declare, though they can declare interim dividend, but they cannot. Final dividend would be only in the control of the shareholders. The board recommends. So dividend is the return to the shareholders. So we have to see what is the meaning of dividend. Then there are two types of dividend. That is interim dividend during the year. During the year, at any time during the year, even though the accounts have not been finalized, if the board of directors feel there is sufficient profit, see, they'll be very comfortable because later on, if it becomes a loss, etc., they'll be in deep trouble. And they have to refund it and all that. There are case laws for that. So they have to be very comfortable. The profits are there. Out of that, we can declare a dividend. So based on that, they can declare what is known as interim dividend. Interim dividend. And of course, at the end of the year, when the accounts are audited, etc., that is, suppose the interim dividend has been declared, interim dividend plus final. Together is the dividend for that year. Interim dividend would be paid on and when it is declared. Thereafter, final dividend would be declared at the AGM and paid. Okay. So there are two types of dividend for the same year. 24 March, already interim dividend would have been paid. Now, because we are now crossed the margin. So from now on, only one final dividend will be proposed in the annual accounts and paid by any company. Current year, 25, for that interim dividend can be paid. We have certain companies, I cannot name them, large listed companies where we do what is known as a dividend review audit. That is our job is, we will only verify the dividend declaration and payment process. And we will certify it. So that that's a sort of a thing we do. So I am saying there the process begins with, even for interim dividend, board meeting. Then in the board meeting, board recommends, then announces. They can't declare, they announce. Then it has to be paid as if it is dividend. And then later, final dividend would be declared by the shareholders, including the interim dividend. Suppose the company declared 5% interim dividend. Later on in the AGM, another 6%. Total 11%, but 5% already paid, 6% will be paid. Total 11% for the year. Like that. Dividend, we will come to that. Then declaration of dividend, transfer to reserves. Some of these topics we may not see, but it is included and covered and important from the exam point of view. If you want to have more information, you should download the main video and watch it. The idea is that you already watched it. And this is more of a clarificatory and thing, but still, I don't know. If you have watched it, it will be good. Otherwise, try to watch it. Depreciation, why it is important, etc. Declaration of dividend out of reserves, very important. I will be dealing with this. Broadly, we will be touching on unpaid and unclaimed dividend. And there are a lot of provisions relating to IEPF, Investor Education and Protection Fund. I will touch upon it. I mean, just like that. There's a lot of provisions which you read from the study material. and also listen to the lecture where it will be thoroughly covered. See, there are about 60 PowerPoint PPT slides, 60 slides, plus 124 for accounts, 104 for auditing. So total 200 or 270 slides are there. It normally takes about 6 sessions to cover. 5 to 6 sessions to cover. So you're doing it in one session. Idea is not to cover the whole, but to give you a broad idea, important topics, and also clarification of doubts. So if you have any doubts, please put it up in the query pad and not in the chat box. Because what I'm now doing now, I can't look at the chat box. So kindly do not use the chat box. Later on, maybe around the end of the session, which for 10 minutes, I may open for 15 minutes and talk. If you feel, no, I don't want to speak, sir, I want to question in the chat box, there you chat box. Until such time, chat box cannot be seen. So if you want your question to be answered, please put it in the query pad, which I am seeing continuously on my mobile phone. Okay, sir. So one important definition in 2 subsection 35 preliminary was dividend includes any interim dividend. Includes means what? Dividend is the shareholders' return on their investment or capital in the company. So you have invested 10 rupees per share, face value. Dividend is declared as a proportion of nominal or face value. So you have technically invested 10 rupees in this company, sir. The balance, whatever you paid, is called security premium. On that, I can't give you dividend. You might have paid in the market some price. We don't know what you paid. We know one thing. You invested in my share, which means that you are entitled to 10 rupees. Plus, whatever the valuation on that day you will get, when the winding up happens, that will be determined. That is okay. But as far as company is concerned, we owe you 10 rupees per share. Plus, whatever you are entitled to. That is moving target. We can't. So, on the nominal or face value as a proportion. Sometimes they may make it percentage. But see, if I say 2% of 10, it will be 2.20. So what normally they'll say is 2 rupees per share, 10 rupees per share, 100 rupees per share, like that. For example, Infosys ka share value is 1 rupee. So they will say 5 rupees per share dividend. There is 500% dividend. 500% dividend. Because 1 rupee share, I'm giving you 5 rupees dividend. See, you might ask me, sir, how is it a good return on my investment? It is not. It is not. It is. Some companies declare dividend. That is, there are some companies like Hindustan Unilever, Procter and Gamble, all the FMCGs, and some of the older blue chip companies, they declare a decent dividend. But even there, the return will be about 4 to 5% of the overall investment in that company by you. 5%. 5% is nothing. 5%, if you really look at it, if you go to a bank and deposit bank, you'll get 7%, 7.5%, let us say. Senior citizen also 9, 7, 8%, something. Taxes there. After tax, post-tax, it will become less. So finally, your post-tax return will be something like 5% on FD. Here, risk is high, no doubt. But you'll get just, I'm not saying this. So the real gain will be when the share price goes up. So nobody invests in equity shares for the purpose of dividend. But there are some dividend declaring companies where at least one annual dividend will come to you. Some X amount will come, right? Some X amount will come. See, on an overall portfolio of something like 3.5 crores, in a year, if I get 3.5 lakhs or maybe 4 lakhs, dividend, it will be high, very high. I don't go 4 lakhs, I will get 5, maximum 5 lakhs in terms of dividend. Okay. So, but the market value, investment, maybe 90 lakhs, little less than 1 crore. Point I'm trying to make here, in that 98 lakhs that I invested, chalo, 4 lakhs per annum, 4.5 lakhs. That's it. Just to give you a broad idea of this. So don't think that dividend is calculated on the market price. It is calculated on the nominal or face value of a share. For example, AB Limited has issued the share cap equity shares, face value 10 rupees. Shares are currently quoting at 250 per share. Company at its AGM has declared 20% dividend. 20% on what? Shaker wants 1,000 shares. which he purchased at 300 per share. Was he paid 300? Today it's quoting 250. That is nobody's issue, yeah. I will give you 20% on 10 rupees. 2 rupees I give you. 1,000 shares. 2,000 rupees you will get. That's all. As a dividend on the shares. Right? I means not I. The company AB Limited will give 2 rupees per share. 20% of 10 rupees. That's why sometimes instead of giving percentage, they will give rupees. They will say 2 rupees per share, 5 rupees per share, like that. Okay. Now, you are aware of this. It's still kind of a recalling. There are two types of shares, preference equity. Preference could be cumulative, non-cumulative. Cumulative, the dividend accumulates. Even in an year of loss, preference shareholders will be eligible for dividend. The dividend will be usually preference shares. If you look at it, you will find they'll be called 11% preference shares, 13% preference shares. That means what? Every year on the nominal value of the preference share, the company will pay a fixed dividend of 13%, 11%, right? And at the end of the redemption, they will redeem the preference share. So, dividend prescription. But in a year of loss, non-cumulative preference shareholders will not have any right to dividend. So, no arrears. That year loss gone. Cumulative preference shareholders, if there is a loss also, their dividend will be accumulated till it is paid in full. So, winding up time, that is a different story. The company never makes profit. Then every year it will be accumulated. Finally, when assets are sold, liabilities are paid off. Then finally, if something is left, you will get preference shareholders to get the amount. There, the dividend, accumulated dividend also will be included. That's it. With that, I think it will be over. That's all. If any money is left, preference shareholders will get it. And that's it for the equity shareholders. That's it. Go. Okay. That is how it is. Right. Equity shareholders. No fixed dividend. No assurance of dividend also. Dividend is dependent on dividend policy and the availability of profit after satisfying the rights of preference shareholders. Dividend is recommended by board of directors. Dividend is recommended by board of directors. So who decides dividend? Board. Because law feels that the board of directors are running the day-to-day affairs of the company. They know how much is needed for future and how much to be retained and how much to be paid out. That's why in finance later on, maybe in this intermediate or final, when you come to finance, you will study payout ratio, dividend payout ratio, reinvestment ratio. They're very important. For a successful company, there should be a reasonable dividend payout ratio. Also, is not paid out by the company will be retained. Retention ratio. Then reinvestment ratio. That is, this retained money should go into assets. So the board needs to keep money for expansion also. See, you are telling you're in that company. You want the share price to go up. How it will go up? Only when the profits go up. How the profits will go up? Only when the sales go up. Right, sir? How will the sales go up? Only when the capacity is increased. Market should absorb. You should create a market. You should also have the capacity to manufacture and supply. So there should be a growth in the market coupled with your own growth to service that market. That needs capital reinvestment. For that, directors need to keep aside a certain portion of the money. So who will decide this? Shareholders cannot. You don't know the future. We are the professional directors or owner directors who have run this company for 40 years. We know what we are doing. You wanted return, now we'll give you. Don't worry. You are an investor. Please wait. Listen to me. But still, because you have invested, I will give you a dividend. Now, as far as dividend is concerned, please listen to me. Very important. As far as dividend is concerned, it does not matter whether it's a normal equity share or a DVS share. Dividend equity share with the differential. If your DVR says, see, for example, usually DVR terms would be the differential voting right equity shareholders will get half a vote. But whatever dividend is declared, they will get 5% more. That's all. So when the equity dividend, normal fellows will get, say, 20%. The DVR fellows will get 20 plus another 5%, 25%. That's all. Otherwise, there is nothing, no big issue in this. So don't think DVR is something different from equity. They are equity, except that the shares carry differential voting rights. Everything there. In fact, we read it when we studied a share capital debenture. The DVR will be treated for all purposes as. See, these are all fundamentals. Put that into your head. Don't forget it. Don't keep on getting doubt. DVR, DVR. Don't treat DVR as if it is some special category. Except the other day we had Sadab asking a very nice question, which was good. That is, well, for calculating the what is that number of for minimum number for demanding a poll, we should take DVR also as one share only. So when I'm calculating 20% of the paid up capital, DVR will be treated same as equity, normal equity. But once the polling is done, while counting the vote, normal will get 1 vote per share, whereas this will get only half vote per share while counting. But for demanding a poll, they are both equal. If I'm holding 100 shares, you are holding 100 shares, it will be counted. Total, we'll have to see that shareholders holding 10% of the paid up equity capital. So there we are equal. But once the voting happens, you are half, I am full. Okay. So that part has to be understood. That's all. It's a good question. Once you have understood it, you will still further understand that DVR and equity are treated similarly, except for voting and dividend. That's all. Okay. So as I told you, there are two types of dividend. Interim dividend may be declared at any time. Usually, many companies, especially the older ones, the blue chips, Procter and Gamble, MRF, all that, the big shops. They are so big. They are so big. You can't even imagine. See, you are able to see some companies because they are visible to you. You can't see these giants because they are so huge. You can only see what you're seeing is actually somewhere near their heel you are seeing. Because if you look up only, you'll see their height. That is the height of these companies, which are called blue chips. So they have this policy of giving interim dividend every once in a quarter they will give, or half yearly they will give a interim dividend, because these companies have a tradition, including Reliance. Though Reliance, see, that's what Reliance is still yet to go there. It may not go there also, but it is a blue chip. HDFC Bank, Reliance Industries Limited, Maruti. Of course, the FMCGs, all of them. The Hindustan Unilever, Procter and Gamble. Tata Group, okay, we'll take it. Tata Motors, Tata Steel, all that. TCS, of course. The IT Walas, Infosys, TCS. So these are all blue chips. They are big, they are huge. They have high bottom line. Okay. They've never made losses. If you really look at it, whatever may have been the last 25 years, these companies have never made any losses. Yes, they have posted lower and higher, but no losses. Okay. They've never had any problem. Why I'm saying this? See, these are safe companies. Okay. But generally, in today's market, it's very high, people will not invest in these companies because they're too overpriced. True. One, you won't find any growth in them anymore because they're where they are. They won't go down also, they won't go up also. But nobody will invest in them. They will go for looking for companies that are useless. If you go in the background of the company, about 5 years ago, they would have made a loss. Then again, even 2 years ago, they would have made a loss. Suddenly, some revival story will be told, some nonsense, the price will go. They'll think it's a good company like that. Cyclical. Or a company that's doing badly, occasionally showing its head and coming down again. Like that. So to be very careful while investing. Whatever it is, one sign of knowing a blue chip, or one sign of knowing whether this company is a long-term growth company, is whether they declare dividend regularly and whether they declare interim dividend. So they got a standard dividend policy, irrespective of what happens in the economy, what happens in the COVID, all that. They are not bothered. They nothing can shake them. They will definitely have a little bit of a reactiveness, but by and large, they are not bothered. They got their long-term vision focus clear. They keep going. Okay. Interim dividend is declared by the board. Though, see, we call it declare, then I would humbly suggest we can use the word announce also, because usually what happens is the board meeting is held and then the dividend is announced. But once dividend is announced by the board, it has to be paid. It can be announced or declared at any time during the period from closure of financial year till hold. Okay. Means 31-3, na? After that, 1-4 onwards, till the AGM, we can declare. Interim dividend can be declared out of surplus in the P&L account, profits of the financial year in which dividend is sought to be declared, profits generated in the financial year till the end of the quarter preceding the date of declaration of interim dividend. So if you have a surplus in the P&L account, friends, please be careful. When you are looking at the balance sheet, you will have share capital, reserves and surplus. Now reserves hai or surplus hai. Ek hi hai na? Ek hi hai surplus. What is the surplus? That is nothing but the balance in the profit and loss account. Everything else could be reserve. Only one surplus. Ek hi hai surplus. But reserve, general reserve, all that. Okay. So if there is any surplus in the P&L, that is P&L account opening balance. This year you are preparing the accounts, you prepared, there is no profit there. But still there is the balance in the P&L account. Now that money can be used for declaring interim dividend, final dividend also. Of course, if you have profits in this financial year, use it, enjoy. Lastly, you are in the interim dividend concept now. So you really don't know what is the financial year, pura financial year ka profit. So you may be declaring dividend now for 25 March. So if so, then you can see what is the profit generated till the end of the quarter preceding the date of declaration of interim dividend. Friends, we are now in the first quarter, so don't even talk about it. Let us say that we are in July. Then the first quarter would be April, May, June. June 30th, first quarter. So I have to see first quarter ka profit. See, current year, we are still in the first quarter. April, May, June quarter. Up to March is last year. Over. That has to be considered for final dividend. But interim dividend, if you want, if your accounts are ready as on 31st March now, if you know what is your profit for 24 March, whatever, but that's very difficult. So what they will generally do is compute the profit up to the end of the quarter and see whether that is good enough. If that is there, they'll say, out of that, I will declare. Anyway, because that quarter profit is going to continue and be there with me till the end. So they won't bother about last year profit also. No. So this is a problem. The company has incurred loss during the current year up to the end of the quarter immediately preceding the date of declaration. For example, I'm in future. I'm in January 25. I want to declare interim dividend. But I find that up to December 24, that year, I have made losses. That year is loss. You know, there are many reasons. Okay. But I still have some surplus in the opening profit is there. From last year, I'm getting profit. No problem. So I have money. But current year loss up to this third quarter end. Now I want to declare interim dividend as a consistent dividend policy. I want to give an interim dividend. No problem, sir, you can give. But only thing they say is such interim dividend shall not be declared at a rate higher than the average dividends declared by the company during the immediately preceding 3 financial years. So you are now in 25 January. You want to declare for the first the 3 quarters ka loss. Luckily, you have some money from the old earlier year. You have surplus in the P&L account. From the up to last 31st March 24, you have used it. But the dividend to be declared, the rate cannot exceed the average rate. So you should see what is the rate at which you declare dividend for 31-3, 2024, 23, 22. And remember, for calculating that, you should say not just the interim dividend of the last year. Total, interim plus final total dividend. Let us say for 24, you declared interim 5. and another 6% at the end of the year on in the AGM. Total 11. Like that, you have to see 23, 22. Total divided by 3. Get average. That is the maximum rate you can declare if there is a loss up to the end of the quarter immediately. And one thing they say is once you have announced it, it has to be paid within 5 days. It has to be deposited into the scheduled bank account. Should be kept in a separate bank account. Within 5 days from the date of declaration, it has to be deposited. See, interim dividend for all intents and purposes is to be treated as normal dividend only. Dividend includes interim dividend. Therefore, once you declare, it has to be paid within 30 days as per usual. But even before that, they say, hey, you can't just simply announce, because some directors will unscrupulously declare and then fail to do it. So once you declare it, it should be deposited in a separate bank account within 5 days. Thereafter, it should be used only for payment of dividend. There you have to comply with the normal rules. Within 30 days, 7 days, you have to transfer it to separate account. Of course, if the board of directors are declaring interim, they would keep some money. But the law is saying, look here, that money is no longer yours. Keep it separately. Okay. See, totally unconnected, but tangential point I want to make here. I know it's unconnected, but as a senior professional with, as of now, 36 years of practicing experience, and with ethical background, I'm telling this to you. If you are a CFO of a company, if you are in any way involved in the financial management of the affairs of a company, kindly remember, advise your management that compliance is very, very important. See, there might be some small benefit in non-compliance initially. Some small benefit where if you are able to use the GST money or the TDS money, you save some bank interest and all some nonsense. But that is not good financial planning. Okay, because the cost of non-compliance is greater than any benefit from compliance, non-compliance. And the benefits of compliance are non-financial. They have non-financial implications. The minute you say money, 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 then you will not comply with certain rules and all. Then later on, you will think it's only a matter of interest I'll pay. No, sir. Penalty is there. Prosecution is there. Once you deduct TDS and don't pay it, it is prosecution. Also, if you collect GST and don't pay it, it's a prosecution. Because it is not your money. It is a government company. I know I sound very rude when I say this to you, but I want this to go into your head that as a member of our institute, remember, you should not be a party to it. There may be some unscrupulous promoters and entrepreneurs who think they are smart. In those cases, better you go to some other company where the compliance is high. Okay. And where you can insist on GST and TDS and PF. PF, ESI, GST, TDS. These 4 matters, the money is not yours. So you have to pay the employee 100 rupees. Instead, you pay him 90. You take 10 rupees from him. That money you cannot avoid depositing. Also, you are supposed to contribute another 10. Now, that has to go to the government. Even at least that contribution you can delay a little. But his money you cannot. Between the two, I'm telling. I know this is a little tangential. But please, as a finance professional, see, being clever is one thing. But being intelligent is another. Be an intelligent person. Don't be a clever person. Clever people in the long run, they'll be affected. Intelligent people, they will always be affected. So compliance is there. See, you want to do some financial planning, do it somewhere else, not in government money. Don't use government money for that. Okay. Anyway, the above condition shall not apply to a government company to invest the entire paid up capital held by the central government. So they are saying, boss, you are government, you are declaring interim, your board, you do whatever you want. Some salient differences between the two. If still some people are having some mild doubts as to what it is and all that, it is like interim dividend is declared and paid during an accounting year before the finalization of accounts. So that's what I said. 1/4/24 to the date you finalize the accounts for audit. Till such time you can declare interim dividend. Final dividend is once the accounts are ready, the audit committee reviews it, then the board, and then it is approved with the shareholders into the close of the financial year. So Final dividend is always after 31st March. But interim dividend is from 1/4. Obviously, you can't declare interim dividend on 1/4. I mean, common sense, please. Let's have some common sense. First time you can even think of interim dividend is in July. 1 quarter over, then you can talk. 2 quarters over, you can take. So first quarter you cannot. Second quarter onwards you can. So thereafter, final dividend, 31st March over, accounts are finalized, board meeting, recommendation, shareholders, approval, pay. After the interim dividend is announced by the board. That's why, though I use the word dividend declared, the act also uses the word declared. Still, I humbly suggest that we use the word announced. Board of directors announces it. But once announced, even they cannot take it back. So they have to be, board has to be very, very careful. They have to be very careful before they do it. Of course, final dividend is recommended. See, when we say final dividend is recommended, remember, in my board of directors report, in my example, 5% interim dividend, 6% final dividend. The board will recommend 11%, not 6%. Why? Because the dividend for the year is 11%, out of which 5 is already paid interim. 6 will be paid now. So the recommendation will be including interim also. But final dividend, they will say, the board of directors is pleased to announce a dividend of 11% for the year, out of which 5% has already been paid and 6% is to be approved by the shareholders. Okay. Now, whether the shareholders can refuse to approve the interim dividend? No. Why? Because you accepted it, took it and spent it now. Now you cannot come and say, then you return it back. But if the interim dividend is declared, I mean, there could be situations where over-enthusiastic board announces an interim dividend and later on the loss is there. No money to pay dividend. Even this interim dividend was paid out of loss, the loss. Then the board of directors are in deep shit. They have to refund that money. The auditor should qualify. All sorts of stuff. If the auditor doesn't qualify, he will also be liable. Have to be very, very careful about dividend. Time of declaration, before preparation of financial statements. Final dividend, after preparation of financial statement, not audit. Preparation, submitted to audit. Audit is going on one side. Board of directors are waiting. There's the auditing is going on. Financial statements are prepared. That stage you can declare final dividend. What happens is the board of directors will finalize the dividend also and then they will prepare. Then the accounts will be approved by the board. We'll be seeing that in accounts by the board of directors at the board meeting. Then it will be sent to the auditor for audit. Not audit, for auditor for signing, certification. So when audit will be, it's all going to happen. It will be in a simultaneous, you know about it. Because many of you will be doing articles by now. You know what I'm talking about. See, audit will be going on one side. First cut will come. First cut will be having all sorts of issues. Then we will point out, they themselves will know there are mistakes. They will correct it. Then second cut will come. Second cut, we will tell this provision has to be done, that has to be done, this has to be done. They will fight. Finally, second cut will go. Third cut will come. Third cut, they would not do certain things we are telling them to do. But we will tell them if you don't do it, it will be a problem. So there will be a discussion going on. The third cut may not be the final cut, but third cut level, dividend will be declared, decided. Then the whole matter will go to the audit committee. Again, the signing partner will have to go there. We'll have a long discussion. We'll tell them, boss, this provision has to be made. If so, profit is there. Still, dividend is okay, but then, without making the provision, I will qualify. So all that will be done. The audit committee will then send it to the board. Accounts. Along with the audit committee will also suggest we can declare dividends. Based on that, the board will discuss and recommend that dividend. Okay, whatever it is. Then auditor, see, once I have told you that you have to make a provision, you have not made the provision, I will qualify. So my audit report, I know I control my audit report. You control your accounts. I control my audit report. So I will qualify. I'll do it. So this is the usual audit. I mean, you know better than me. You're all experts in auditing and all that, but I'm just saying this is a process. Okay. Of course, if this is done with a lot of documentation, with a lot of clarity and with a lot of friendliness, it may not be a, shall we say, confrontational process. It can be highly collaborative, but with a lot of clarity of borders, fences, so that I stand here, you stand there. We can be good friends, but my fence is there. You can't come here, I can't come there. I can't look at this from your point of view. You try to look at it from the shareholder's point of view, which is what I'm concerned here. There is no my point of view here. I'm the auditor. I have to look at it from the stakeholder's point of view, compliance point of view, government point of view. I am the protector of the stakeholders' rights. So you look at it from the stakeholders' point of view. If you are not able to look at it from the stakeholders' point of view, then what corporate governance, what are you talking about? So time of declaration. Before preparation of financial statements. After the brew, we saw that. Revocation. Now, interim dividend can be revoked with the consent of all shareholders. Please note it, friends. Board cannot. Once announced, board has to pay. The board cannot say, sorry, we made a mistake, we can't give you. But suppose they honestly feel it cannot be paid. Then they can go call a meeting of the shareholders, fold their arms and fall at the feet and say, sorry, we made a mistake. Then if the shareholders consenting, you can revoke. Final dividend once declared cannot be revoked. That's the end of it. You have to pay it. Or else the board of directors go to jail. Okay. And I'm not joking. The penalty includes jail. Articles of association, it is declared only when the article specifically permits. Whereas for final dividend, there is no need for any specific provision. Declaration of a final dividend is an ordinary business under the Companies Act itself. So here we have a sample problem from the 2018 examination, just for discussion. PET Limited incurred loss in business up to current year quarter of financial year 17-18. The company has declared dividend at the rate of 12, 15 and 18% respectively in the immediately preceding 3 financial years. In spite of the loss, the board of directors of the company have decided to declare interim dividend of 15%. Examine the decision of PET Limited, stating the provisions of declaration of interim dividend under the Companies Act 2013. Friends, now I'm going to teach you something, which is, I'm going to use this problem to teach you how to write an answer. How to write an answer. First of all, 4 marks. It's not a joke. Easy. Student who knows the subject should get 4 out of 4. Ideally. But law is not like mathematics, where you cannot give you a sentence. One more reason is, unfortunately, handwriting, language skill. If you're writing the examination in English, then your command over English. Even in Hindi, sir, even if you're writing it in Hindi, language, bhasha hai na, how to write. See, the way you speak. See, why is Kalidasa such a great poet? Because the way he uses the words is different from others. So even for people who know, even in Hindi, there are beautiful ways of writing Hindi. So you go to places like Lucknow or Prayagraj, there they speak Hindi so beautifully. So like that. So that you can speak in such a way that it will be extraordinarily, professional Hindi. Even Hindi, I'm telling, I'm not joking about English. So the language skill of the student plus the handwriting, these things make a difference in this. Okay. And of course, English also. Your grammatical English, of course, idiomatic English, the way you write the answer. So I'm going to now teach you a simple technique which anybody can use. Even if grammar is not there, it's okay. Because one more thing, when you are writing CA paper, lot of lenience will be given for not writing grammar. Because our concern is not whether you are Shakespeare or Milton, sir. We don't want you to be Shakespeare or Milton. We don't want it. If you are good, if you are not also, that should not penalize you. But what we are expecting is correct answer. So what is the crux of the issue here? Where a company wants to declare interim dividend in a year when there is a loss up to the end of the quarter immediately preceding, right? The average rate of dividend, proposed rate should not be more than the average rate for the immediately preceding 3 financial years. This is the crux. If a student writes this, he will get 3 marks. Grammar, that's any way you want. Company want to declare dividend. Here, although loss, then dividend rate not to exceed average rate of dividend rate rate for last 3 years. No problem. The way I know said it also, nothing wrong. Okay. But if you're able to rate exactly what is given here, then that will be better. Whatever it is. Now let us see this and let us analyze it into 4 different parts. Whenever we are writing an answer in law paper, I would humbly suggest that you divide that into 4 clear parts. If you do that, you will get more marks. See, suppose you write something blah blah blah. Within that, this content is there. The examiner is patient enough to search and give you. But he'll be so irritated that for 4, he'll give 2.5 or 2. But if you write the way I am telling you, you'll get minimum 3.5. 3 to 3.5. First, Pet Limited has incurred loss in business up to current quarter of financial year 17-18. It is there. You are only restating the facts. Company wishes to declare dividend at 15%. That's all. That's all. Don't bother about 12, 15, 18. Now don't write all that. What is the point? They have incurred loss up to current quarter financial year. They want to declare dividend of 15%. Now, this is where you will get full marks. Write this paragraph. This entire paragraph has to be written. This is the answer. In cases where the company has incurred loss during current financial year up to the end of the quarter, immediately will be the rate of declaring interim dividend. Such interim dividend shall not be declared at a rate higher than the average. If you can write it like this, good. No, sir, I will write in some way I want. Please. So long as the meaning is not lost. Then, so you have written the facts, you have written the law now. This itself you are entitled to 2.5 out of 4. Now what you have to do is apply this law to your facts. Therein you say the company has declared dividend at the rate of, or say last 3 years dividend. Like that you write below that. So this is 17-18 now financial year. So that will be what? 16-17, 15-16, 14-15. 1, 2, 3. Next to that 12, 15, 18. Put the total. Then average of the above is, you will find it is 15%. If you total up these 3 numbers, 12, 15 and 18, by now you would have got 45%. 45 divided by 3 is, in case I'm sure they have not changed it in the meantime, as of now it is 15%. So the average is exactly 15. There, okay, so you will say average rate of dividend is 15%. Got it? Now you have applied the law to the facts, arrived at the number. Now, write a conclusion. What is the question? Examine the decision of PET Limited. So, the decision of PET Limited, or you can ideally say the decision of the board of directors of PET Limited to declare interim dividend at 15% is correct. Therefore, the decision of the board of directors of PET Limited to declare interim dividend at 15% for the current financial year is correct. That's all. Friends, you write this neatly. 4 on 4 also possible. 3.5 sure. Now, this is how you will get marks in law. Question by question. See, it is like a cricket match, boss. See, I go and stand there. I have every ball I have to play. Every ball I have to get a boundary. I have to get a sixer, at least 2 runs. Every ball. Run rate is very important. Every question I have to get marks. So overall, the paper will not be evaluated. No paper will be evaluated overall. There is no examiner will read the entire paper and say, okay, overall, I think this paper I'll give 40 marks, 50 marks like that. No. I will see question by question and clear. So answer by answer, I will see. So every question you are right. I make this point again because this is an opportunity for me as a faculty to give you these inputs. Friends, student who does not write answer for any question is writing for a reduced number of marks. For example, question 100, the paper is for 100 marks. Now, you are not writing, you have missed 2 questions, totaling 15 marks. That means what? You are going to be evaluated only for 85 marks. Out of that 85, how much you will get? Whereas, suppose you have written something for those 2 questions. Something. Okay. Could you write something? You write. What? Still give 2 marks. 1 mark. Something. Because even if you have written very good answers for the earlier questions, these 2 questions that you think you don't know well, or you didn't prepare, or you had cousin's marriage, therefore you did not study, Something like that. Okay, or Srikanth did not teach well. Something, put blame on other people. Never it is your problem. It is always outside world. They are at fault. Okay, like that you put whatever it is. You didn't study. So something in that paper only, that fellow can give you 1 mark. Yeah. 2 marks. But out of pity, he will see. Already good student studied. So though he let me that out of sympathy, 2 marks also you should write something there. Out of sympathy, half mark also you should write something there. Got it? So please, just I want to make this comment, though some of you might think it is out of place or unnecessary. Who are you to tell me all these things? Teach the subject and go, like that you might tell. But still, as a person who has got All India rank in both inter and final, CA and ACS, 4 times All India rank holder, I thought I will share these thoughts with you. Of course, you are definitely more intelligent than me. Just think about it. That's all I'm telling. Okay, Alex Limited is facing loss in business during the financial year 2018-19. Same. 3 marks. See how repetition this question is coming. Think about it. So in this case, what is now you go to that? No, let us not bother about presentation and all. Quickly go to the root of the point. See, which is where a multiple choice question is so easy. The same question, suppose it's asked as MCQ, this is how it will be. This last one they won't have. Examine the decision won't be there. That the board of directors may declare interim dividend for the current financial year at 12, 18, 15, 10. Correct answer, C, 15%. Like that here, what is the correct answer? They want to declare 12%. So, but the correct answer is they can declare only for 7 plus 11 plus 12. How much do you get? 7 plus 3, 10, 1, 20, 30. 30 by 3 is 10. So they can only declare for 1 by 3rd. Average is 30%. Now, some of you might have this question, and if you ask that, it is correct. Some of you may have that doubt. If you ask that, you're right. So suppose this company has not declared dividend in the last 2 years or 3 years or whatever, then nothing. You can't give dividend, that's all. Interim dividend cannot be declared. Wait for the year end. Final dividend, interim dividend, no. Or suppose in last year you didn't declare dividend, year before that 15%, year before that, for example, 5%. So total is 20, nah, plus 0. Divide by 3. You got it? Because the third year is not, you can't ignore. You can't take 5 plus 15 plus by 2, 10. No. You have to take 5 plus 15 plus 0 divided by 3. 20 by 3. Now you get. Now some questions have been asked. Let us see what they are. But I'm not very clear. Why do they give the X date after the interim dividend declare? Malappaji, what do you mean by X date? You mean ex-dividend, is it? Why do they give the X rate, you mean? X rate or X date? Ex-dividend. See, that is part of finance now. Come dividend, ex-dividend. Is that what you're talking about? Come dividend, ex-dividend. See, when I am buying in the share market, immediately after the dividend has been declared, what happens is you are selling that share to me, right? No, but then again, that ex-div come div will not happen after the dividend is declared. It will be happening on the record date. See, what happens is I am holding the share on the record date, sir. I'm in on that date. I am entitled. Next date, I'm selling it to you. Next day, I'm selling it to you. Now, I will get the dividend. So if there's no problem, then we'll get. But you will say, boss, this dividend you're going to get, I need it because I'm now holding it. Whatever it is. So the rate would be ex-div or cum-div. That's all. Cum-div means the dividend will be included in it. Ex-div means the dividend will not be included in it. It will be not without dividend rate. So something like that. Or if I'm selling it before the record date, and you will get it now, because by then if you get it, you will get it. So you are entitled to the dividend now. So I'll give you cum-div. Depends on the negotiation between the buyer and seller, whether to go for cum-div or ex-div. I think that's what you mean. Kindly confirm to you whether that is what you meant. And I have understood correctly. And this has nothing to do with the law. See, in the Companies Act, there is no ex-div cum div. It is only in SEBI and in the financial markets that we have cum div and ex-div. The two immediately before or after declaration of dividend. Okay. So nearing the date of dividend, if any share is being sold, it will be sold cum div, so that the person buying it now, he will surrender, he will give extra money for the dividend that he will get. He will get the dividend, he is not entitled. The earlier holder was holding the share. Now he is entitled, but he won't get it because on the record date, you will be the owner. Therefore, the negotiation will be such that I'll pay. In case such is not the case, it's called ex-div. That is incorrect. After the dividend is declared, then whosoever name appears on the record date will be there. And that, so rate will be ex-div. I still don't understand what is ex-date. Sorry, boss. I am not able to understand ex-date. What is ex-date? One second. See, the ex-date or the ex-dividend date is the trading date on or after which a new buyer of a company stock is not owed a dividend payment. The ex-date is usually, that's in India, we don't call it ex-date, we call it record date. It's called record date. On the record date, whoever is holding the share will be entitled to dividend. After the record date, whoever buys will not be entitled to dividend. Therefore, so usually when we declare a dividend, we will announce a record date. On that record date, whoever is there only will get dividend. So after the record date, the price will become ex-date. That's why it's called ex-date. After that, it will be the price will be ex-div. Anyway, but that is 100% not part of law. It is finance, but it's still, I cannot say I don't know and go away. What I did not know was this ex-date. I know it as record date. That is okay. But the concept is the same. Once the record date is passed, then the rate will be ex-div rate. Nearing the date, it will be cum div. Because you are selling, but my name will come. Therefore, I have to give you the dividend to you. Okay. Pooja Gupta gave us the correct answer for this, which is 10. Beautiful. Thank you. So, sources of declaration of dividend, I don't have to tell you all that. And profits for the current year should be considered. Then previous year's losses should be reduced. Depreciation, which is not provided in the earlier period, should be reduced. And remember, profits for current year should be after providing for depreciation in accordance with Schedule 2. So, if you declare dividend cannot be declared unless depreciation has been provided in accordance with Schedule 2. Why this is so? Why this legal provision that you cannot declare a dividend unless you provide for depreciation is a very, very esoteric point that if I tell you now, you may get confused. But one thing, this is the only time this can be taught to you, because after this, you will never study law. You will go to self-paced module, you will do some blah, blah, MCQ. After that, you will forget company law also, and you will rely on company secretaries for your entire knowledge on company law. It's okay. But right, let me teach you this one point, which is esoteric. See, you are all chartered accountant students and you are highly brilliant in finance and accounts. So you will understand what I am telling. Boss, look at the balance sheet of a company, man. Simple balance sheet. Simple balance sheet. Let us say if I can even show it here. No? See, let us take a balance sheet. On the liability side, share capital A 100. On the asset side, fixed assets A 100. That's all. Simple balance sheet. Simple. Now, this company, the shareholders have invested 100 rupees, fixed assets. Every year, this company makes profit. Every year, this company makes profit. Whatever profit it makes, entirely they give it as dividend. It's a very peculiar company. 100% payout. So this year, let us say the company made 20. Straight away, 20 given to shareholders without providing depreciation. So what happened? 20 profit, straight away 20 gone. 20 gone. Straight away, immediately paid. Means this way. And see, there will be 20 profit, 20 cash. Straight away, cash given to the shareholders, close. So very, very, very hypothetical example. But suppose that happens 5 years later, 5 years later, on the liability side, I'll be showing 100. On the asset side also, I'll be showing only 100 because I have not provided for depreciation. But suppose the company goes into winding up on the end of 5 years. Suppose the company goes into winding up at the end of 5 years. These assets will realize, let us say, these assets, the realizable value will be only 50. Then the shareholders are to be paid 100. That are able to understand what has happened here? Because the company has not provided for depreciation, the company has effectively declared dividend out of capital. See that 50 rupees, now where did it come from? It came out of the capital only. Because the fixed assets have got reduction in value. You're not recognizing it. You're not keeping it in the books. Instead, you're giving the entire money to the shareholder. He is rejoicing and going away happily. Right. But at the end of the day, the same fellow will come and ask you for 100 rupees. Who will give him? See, you don't have it because the fixed assets will not be worth 100 now. It will be 50. Therefore, intelligent company, what they will do, not why intelligent company, any financially disciplined company, what they will do, they will not give full amount. They will retain a certain portion of the money. For example, every year, say, useful life of the asset is 10 years. Then every year 10 rupees, for example. So for 5 years, I would have made a provision for depreciation. Am I correct? That provision for depreciation will be coming here. Am I correct? Now, so in the balance sheet, 100 rupees share capital, 50 rupees provision for depreciation. Or instead of showing it here, I can show it as a reduction here also. Doesn't matter. Whatever it is. At the end of the 5th year, my fixed asset will be only at 50 rupees. And 50 rupees cash will be available in the business. How? Because profit to that extent I would not have paid now. Whatever profit I got in cash, I would have paid. But except the depreciation 10 rupees for 5 years. So I'll have 50 plus 50, 100. So if at that time, in case the shareholders are requiring the money, I've got sale of assets 50. Sale of assets 50. Cash 50. Total 100. Throw it at that fellow's face. Close. This is how it should be done. Friends, I know this is very, very esoteric. I don't know how many of you could understand this point. If you can, then you are intelligent. You are ready to become CA. This you have understood means you are ready to become CA. Ready? Now you are ready to become CA. Of course, if you have understood it, I'm very happy. That is why depreciation. Some of you will be, if I ask you why dividend to be provided, you will say, sir, in order to replace the assets or like that. Boss, think about it. This 100 rupee fixed asset, 5 years later, will it be 100 rupees? By then, inflation would have happened, boss. It will be 150 rupees. So you can't use this 100 rupees to replace that asset. No. The real reason why we provide for depreciation is that too. This particular topic is linked to dividend. Kyun? Because if you declare a dividend without providing for depreciation, it will amount to declaration of dividend out of capital, which is prohibited. Therefore, the law says, if you want to declare dividend, depreciation should be provided in accordance with Schedule 2, based on the useful life of the asset. I know, I don't know how far I was correct in giving this esoteric explanation, but I somehow when I wrote a book for final CA, once upon a time, this subject was in CA final exam. Then they pushed it to intermediate. So at that time, when I wrote a book for final, CA final, corporate and allied laws, it was called. In that book, if you have an older edition of it, I think about 7 editions came. Then that was it. After that, the law changed, I changed, everything changed. And I said, go to hell, and I went away. Because 2013 Act, I refused to have any truck with it because of so many mistakes in it. So there was about 5 years when I never went near company law. Then again, what 5 years? Almost up to 2020, but still 186, 185, 186, 188, because they were all linked with, so the people used to call me, Srikanth sir, you have to come and give us a lecture on 188. Company said it should have given 188 lecture, 185, 186. But by and large, I was not very comfortable with 2013 law. I said, I don't want to teach. I stopped teaching. 2012 to almost 2020, I stopped teaching. Private teaching, I stopped. Institute teaching, and company, I stopped teaching. I only used to teach costing and finance for company secretaries. And I used to go to B schools where I taught finance. I offered courses on finance and business valuation. That's it. I never taught company law till 2020. When the board of studies, they called for faculty. I said, okay, let us see what happens. Pandemic, I had nothing to do. So I said, okay, let me start an online courses. Old man, Buddha ho gaya na. So now I'm able to sit in front of your computer and talk. Because in those days, my classes used to be like 150, 200 people. And I can't sit and I will run and I will teach. Every student I will go and I will personally ask them, have you understood like that? So why I'm telling this, I became tired. Body is there, and body became tired. Now, again, I've come back to your company law for the last about 2020 to now, almost 4 years now. Whatever meaning I can make out of this law, I'm trying to make. You know why I'm laughing? Don't worry. Miss Agarwal, namaste. That is the best Hindi. Namaste. That's all. Beyond this, no Hindi. Namaste. Okay? No Hindi. No Tamil also, no Hindi also. Namaste ji. That's all. Try to understand in what I'm telling. Otherwise, my loss that you are not able to understand. My loss or your loss? You decide. Okay. Now, I know this concept is so difficult to understand even in English. It's a very esoteric concept. What to do? If you don't understand, no problem. Simple. You cannot declare dividend unless depreciation is provided in according to Schedule 2. Kyo? I don't know. You don't know. Don't worry about it. Even if you don't know, nothing is going to happen. Okay. If you know, then your awareness as a member of my institute will become deeper. You will become a meaningful and valuable member of my institute. Okay. That is in your hands. Okay. Thank you, Ms. Sangeeta Vani. Thank you. You know, usually this whole thing is divided. No way. Let's not go there. No, don't go there. Namaste. That's all. The maximum Hindi is from me is namaste. Okay. Okay, Rohani Jain, good. Okay, whatever. Let's go on because the time is running out. I would love to see this topic, if properly taught by me, needs so much involvement, even online. But time is the problem. Here we have to go fast and we have to complete the topic. Important, but still very, very important. This topic, which I'm now going to cover, I will go slow in English also. I will go slowly. Okay. But you try to understand. If you can't, what to do? I will go. I will explain in Asan English. Okay. I will not use Shakespearean or Miltonian English. Simple English. Asan English. Right to understand. Declaration of dividend when there is inadequacy means or absence means no profit. Profit nahi hai. There is no profit for the current year. What to do? Okay. Where in any year there are no adequate profits for declaring dividend. Adequate, be careful. See, after doing this calculation, I get a number. That number is negative. That means no profit. Or there is some amount, but there is not sufficient. I want to declare 20% dividend. I calculate 20% on the paid up capital. I'm getting one number X. The amount available for declaration is less than X. That means the profit is not adequate or no profits for declaring dividend. the company can declare a dividend out of profits of previous year transferred by it to reserves. So, transfer to reserves, earlier there was a compulsory transfer to reserves rules. Now, under the 2013 Act, one of the good things they have done is they have given that power to the board. They have told board is the deciding factor. Let them decide whether it is to be declared or to transfer to be done or not. So whatever they want to transfer, they can. But suppose in the past, you have transferred from P&L appropriation account, you have transferred to general reserve or dividend equalization reserve. So free reserves that are available for declaring dividend. Such reserves are there, which means capital redemption reserve, no, not available. Why? Specifically said, no, it becomes part of permanent capital. Security premium account, no, it's not available for declaring dividend. Like that, any earmarked statutory reserve, where under any law, you are required to, any law, you are required to create a reserve, statutory, you can't use for declaring dividend. Also, debenture redemption reserve, DRR. No, because that is meant for redeeming debentures. That is called earmarked. So, those cases, you have to, don't touch it. So, free reserves, which have been transferred to the reserves, you can now use it for declaring dividend. Okay. So, no dividend shall be declared or paid from its reserves other than free reserves. Free reserves means reserves which, as per the latest audited balance sheet, are available for distribution as dividend. As I told you, any revaluation reserve not available, notional gain, etc., not available. For example, for the purpose of compliance with IFRS or IDAS, you might have created notional reserves for calculating fair market value. You would have shown the asset at FMB. For that purpose, you would have created one reserve and shown in liability side. That's all notional reserve. Okay. When you are measuring the asset or liability at fair value. So that will be there for the purpose of disclosure and for the purpose of financial reporting. But that is not available for declaring as dividend. Revaluation reserve not available for declaring dividend. The following three conditions have to be satisfied simultaneously. Means all of them have to be satisfied before dividend can be declared. So usually, they are given in an order. No, in that order only we will see. So I'm going to tell three conditions. First, you have to apply condition 1. Then you have to apply condition 2. Then you have to apply condition 3. If everything is satisfied, then and only then, to that extent only, you can declare dividend. So let us see the three conditions. Then we will work out. I'll take you through one practical example. So the rate of dividend first. The rate of dividend. See, this year the board of directors wants to recommend a dividend of X%. Whether that X% is allowed or not, how to calculate? Just like we did for interim dividend, when there is a loss in that quarter, to that quarter. Same way, you calculate average dividend for the last 3 financial years. So, rate of dividend should be less than or equal to RD1 plus RD2 plus RD3 divided by 3, where RD1, RD2 and RD3 are rates at which dividend was declared by the company in the immediately preceding 3 years. See, in the example that we saw, we had, so those 3 amounts you put divide by 3. So, first step, the rate of dividend cannot exceed the average rate of dividend declared by the company in the immediately preceding 3 years. Look, here they are very clear. See, there this clarity was not there for interim dividend. But for declaration of dividend out of reserves, they are very clear. This condition shall not apply if the company has not declared dividend in each of the 3 preceding financial years. So the minute you say, sir, last year I did not declare dividends, then no problem. This condition will not apply. Ignore. The same clarity is not there for interim dividend. I want to be very clear. There, If at all you have not declared, I will take it as 0 divided by 3. Here, ignore. This condition will not apply. Second condition, you have determined the rate. For example, you calculated the rate, average rate. It comes to 15%. Now, what you should do? You should calculate 15% on the face value of the share, paid up capital. 15% on the face value. What is the amount you see? That amount, the total amount that can be drawn from accumulated profits for declaring dividend, shall be less than or equal to, I've given the form of symbol for easy understanding. So less than or equal to 10% of paid up share capital plus free reserves. Friends, the minute you see paid up share capital, be immediately conscious. Somewhere you have to put it in your brain. Paid up capital includes preference capital. Paid up capital includes preference share capital. So if preference share capital is there, that should also be added for calculating paid up. Free reserves. Free reserves are reserves which are available for declaring dividend. Revaluation reserve cannot be in, all that blah, blah, blah. CRR cannot be taken. Securities premium cannot be taken. Blah, blah, blah. Okay. So the amount so drawn shall first be utilized to set off the losses incurred in the financial year in which dividend is declared. And only thereafter, any dividend in respect of equity shares shall be declared. So first what you should do, whatever is the current year loss, adjust it. Calculate 10% of PC plus FR, take that amount, minus current year loss. Whatever is left over, only, whatever is the balance, only can be used for declaring dividend. Lastly, you have declared dividend. After that, what will happen? The reserves will come down now because you have utilized the reserve for payment of dividend now. So what entry you would have passed? You would have reversed the reserves now. The reserve is gone. In the P&L account, you would have P&L appropriation, you would have reversed it. Then only you can declare dividend, Baba. Otherwise, where is the balance to declare? So general reserve debit, dividend equalization reserve debit to P&L appropriation, then to proposed dividend. So that entry that will be closed now. So that reserve will be reduced now. Now the balance of reserves after such withdrawal for dividend only shall not fall below 15% of its paid up share capital. So what you do, you take the paid up share capital, including preference, calculate 15%. Your balance of reserves should not fall below 15% of paid up share capital, right? Now, though theoretically, in an abstract manner, we have studied this, it would be good if we can do a numerical example. So I'm going to do this numerical example. Simple example. Company has a paid up capital of 200, accumulated reserves of 240. All are free, available for dividend, assuming. All are free. Loss for the year is 30 lakhs. This year they have incurred a loss of 30 lakhs. Luckily, in the past, they have done well. They have accumulated reserves of 240. It's actually a good company, huh? 200 lakhs, paid up capital 240. Some reason they have gone for loss or whatever. Loss for the year is 30 lakhs. Now they still want to declare a dividend. And in the last 3 years, they have declared 9, 10, 12. So they are coming to you and asking. In fact, in the exam, they'll say, kindly advise the board on the rate to which dividend can be declared during the current year. Rate to which. Or if it's a multiple choice question, what they will say, the board of directors of the company can declare dividend for the current year at the following rate. At which of the following rates? A, 10.6%, B, 12%, C, 10%, 7%, D, whatever. They'll give you answers. You choose. So in both cases, you have to compute. So first you have to see average rate, 9 plus 10 plus 12, 10.3%. 9 plus 10 plus 12 by 3, 10.3. Therefore, the first condition only we have seen. See, the beauty is in multiple choice, the second choice would be 10.3. They'll give you 10%, then they'll give you 10.3%, then they'll give you 7%, and finally they'll give you 12%. So the minute you see 10.3, 10.3, I got it. Wait. We have only seen rate. The rate of dividend shall not exceed 10.3. Now apply that 10.3 to the paid up capital, only equity. Assume that this is only equity. Though for paid up capital, You can calculate, you can take both. But also remember, you have to pay only on the paid up equity capital. So calculate that. Okay. So 10.3% of paid up equity capital is 200 lakhs means 10.3, 20.6 lakhs. So if you want to declare dividend at the rate of 10.3, which is the average rate for the last 3 years, you have to spend 20.6 lakh rupees. You have to spend it. You have to give it out. That is the quantum. That is condition 2. The quantum means amount, total amount. Quantum means amount. The amount shall not exceed 10% of paid up capital and free reserves. So paid up capital is free reserves, 200 plus 240, 440. 10% thereof is 44 lakhs. But remember, the amount should be first utilized to set off the losses. Only the balance can be used. So from that 44, I have to adjust the loss for their 30 lakhs. So the balance amount available is only 14 lakhs. That 14 only available for declaring dividend amount. Now I have to see one more thing, which is if I'm going to use that 14 for declaring dividend, only for, see, I'm adjusting 30 lakhs, but only 14 is going to be used for declaring dividend. Yeah. So balance of reserves is how much? 240 accumulated, 14 would go for dividend. Balance is 226, which is more than 15% of the paid up capital. So paid up capital is 200 lakhs. On that 15% is 30 lakhs. Whereas the balance of reserves is 226 lakhs, which is huge. So final conclusion, the company can declare dividend of 14 lakhs. That is at 7% on a paid up capital of 200 lakhs. How did I get 7%? How did I get 7%? It's simple. 14 divided by 200. That is this paid up capital na? Into 100 gives me 7%. Okay. This is one example. One more thing, please be careful. While you are doing this exercise now, suppose preference share capital is there. If any preference dividend is there, that also should be adjusted out of this. Why? Because, you see, boss, you cannot pay equity unless the preference fellow is paid. So if preference shareholders are there at say 8% preference shares, first that 8% also should be reduced. Then only whatever is left you can take for declaring. Though it is not a condition, here it is a condition in law. You cannot pay equity unless the preference is paid. So that also to be reduced. Got it? So this is an important topic, somewhat frequently tested, but not so. See, I have given elaborate problem. Exam, they might give you a straightforward and simple problem. Sometimes they will even give you the 3 years average they will give you. They won't give 3 years. They will give average and whatever. Okay. Principle is important. Hope you have understood. Now, so sir, you have declared a dividend, but there are some prohibitions. I told you, no? Deposits, now, if you are accepting deposit, you are under heavy threat. There are so many provisions where you cannot do it unless you have repaid deposits with interest. You can't make intercorporate loans and investments. You can't declare dividend differential voting rate shares. You can't go bonus shares. So many things you buy back. So many things you cannot do if you have not repaid the deposits together with interest. So non-compliance with 73 and 74, which we saw, would automatically mean you cannot declare a dividend. Similarly, Section 8 company, by its very formation, by its very conceptual basis, is prohibited from paying any dividend to its members because profits are to be applied only in promoting the objects for which it is formed, cannot declare dividend. Section 8 company prohibited. Other than that, all companies, if they accept deposits, they have to. So quickly, let us run through this. Dividend should be paid within 30 days. Dividend on declaration should be paid within 30 days. For calculating 30 days, please remember, when we come to general classes, we will discuss this. For calculating 30 days, whenever the word from is used, the date from should not be considered. You should start counting from the next date, 30 days. Always remember that. So from the date of declaration, the dividend should be paid within 30 days. So date of declaration not to be considered. Thereafter count 30 days. At the end of 30th day, you have to pay. You should pay. You are not paid. In many cases, I don't mind paying first. See, today, no listed company can give check. If you are a shareholder of listed company, you should be having a demat account. You should be registered with the depository participant, DP. The DP account should be there. DP ID should be there. Everything should be there. Once you have a DP ID, automatically the DP would have done KYC. And the DP would have linked at least minimum one bank account with your DP account. That account will be given to the company or to SEBI. And for all intents and purposes, dividend, all payments will be credited only to that account. Which is why, as a practical point, if you are now you're a young student, out of enthusiasm, you would have opened a DP account for which you would have linked your account with, say, Equitas Bank or whatever. Let us say there's no Equitas Bank after 5 years. You are out, boss. Don't do it. Open an account with a reputed bank, like, say, for example, State Bank of India or whatever. And that account, you give it for DP. And keep it as your sort of permanent account and use it. And I'm not saying Equitas. I'm only saying be careful because it is your life. And that account, you keep it permanently with the DP. All in dividend will be credited to that account automatically. So, but the problem is, Mr. A gave his bank account. Thereafter, he never updated the bank account. Bank account got some. See, the bank will make your account inoperative because you are not given KYC. Every year they will ask for KYC. I asked the bank, boss, when I opened, I gave everything. No, sir. Central RBI norms. Every year I have to collect KYC. Okay. Collect. So, because if you don't give, they will say your account is inoperative. In those cases, what will happen? I would have attempted to pay the dividend. The company would have given an instruction to its banker with clear bank details. Usually when we audit dividend audit, finally what we'll do, we will see whether the dividend, this thing has been correctly taken. Many cases, it won't be done manually, boss. It will be done by the computer. Program is there. It will pick everything from the database. Chuck. We will only do a kind of test audit and we will see whether it's correct. And then it will push and payment will go through the bank. Now, one account is not operative. Then it will bounce back now. So to that extent, on the 30th day, there will be unclaimed dividend. Please distinguish between paid and claimed. No company would avoid paying. But unclaimed dividend will be there, in which case such unclaimed dividend should be deposited in a separate bank account within 7 days. Also, it is quite possible. One more example I'll give you. One of the shareholders might have gone to there might be dispute between two shareholders. They might have gone to tribunal and tribunal might have passed an injunction instructing the company not to pay dividend till they pass the order. So to that extent, even though dividend is declared on those shares, it will not be paid. So whatever it is, unpaid, unclaimed, should be deposited within 7 days of 30th. 30 days got over now. From that last 30th day, don't include that. From the next day, you start counting 7 days. Within that 7 days, you should deposit the unpaid, unclaimed dividend amount in a scheduled bank called unpaid dividend account. It's not done. Then, whatever amount you have not deposited in separate account, you should pay interest at 12% per annum. Usually, what intelligent companies will do now, most companies where we do this dividend audit, what they do, they open a separate account and transfer the entire amount to that account. From that account only, the money will go. So that even that account will be kept separately. Okay, unpaid dividend. They'll ask that name to be changed to unpaid dividend account. That's all. Thereafter, it will be there. How long? For 90 days. Within 90 days, they have to prepare a statement with the name, last known address, unpaid dividend amount, and put it in the website or any website approved. Idea is you can go there, see your name, and come. Okay, that money will be lying there, doing nothing for 5 years. Interest may be earned, but you can't take it. The company cannot use it. The company cannot touch that money. It's a liability that will be there. That's all. 7 years. At the expiry of 7 years, the amount should be transferred to the unpaid, unclaimed dividend. That unpaid or unclaimed dividend plus interest should be transferred to the IEPF, Investor Education and Protection Fund. It is not Investor Protection Education. It is Investor Education and Protection Fund. Both cannot be done. Sorry, I'm being very blunt here. I've been the secretary of the Tamil Nadu Investor Association for 3 years. Investor cannot be educated because they think they know everything. How can you educate a super brilliant man? They know everything. Mr. Srikanth, you are a chartered accountant. You don't know anything like that, they will say. Absolutely correct, sir. Dubacor Limited is the best company in India today. Okay, sir. Thank you, sir. They know everything. How can you educate a super brilliant human being? You cannot. Finally, you can protect him also because he will invest in Dubacor Limited without seeing the balance sheet, without seeing the past performance, without seeing the track record of the promoter, nothing. Based on the chart, he will say, buy, sell, buy. Then suddenly market will collapse. When the market collapses, Dubacor will go triple times, it will go down. He will lose all his money. Then he will say, Mr. Srikanth, this chartered accountants, you people are the problem. You are not verifying the balance sheet properly. Because I have verified and I have certified, I have qualified, notes on account, so many things are there to protect you. Did you read the balance sheet? Did you even touch the balance sheet? Huh? At that time, what you do? Balance sheet is not important. Huh? Chart is important. All physics, chemistry and all you are talking. Now you are telling auditor. What auditor? Go and take the balance sheet. I have clearly told you Tobacco Limited problem. Everything has been told by the auditor. You didn't read. Whose problem is that? I'm sorry. This may sound a little bit of argumentative, but I'm telling you, I have been the secretary of the Tamil Nadu Investors. So many times I have stood before them with folded arms. I have begged, sir, please read the balance. Mr. Srikanth, you are a chartered accountant. Don't support the balance sheet P&L. Why? Satyam balance sheet was wrong. That's all. That is the only reason. One company ka balance sheet, one auditor made one Ramalinga Raju means I will not touch the balance sheet after that. Even no. If it is audited by some highly brilliant chartered accountant, no. I won't touch. I have lost confidence in balance sheet. Like that, no, they will talk. Simply I will listen to them nicely and come. Okay, what to do? Then only I realized you cannot protect the investor from his own ignorance and greed. That ignorance coupled with greed makes the investor a very peculiar animal. And we are going to see the beauty of it. 2024 AD, we are seeing the beginning of that. The greed is going to come now. You know, my father, when I was, say, 14 years old, 13 or 14 years old, my father used to enjoy watching movies. And so we used to watch some of the old movies and English movies also. My father used to love watching English movies. So there was a movie called Meccana's Gold, where my father and I, we watched it. And in the last scene, you know, the people will go madly that horses they'll be running towards the gold in El Dorado. And then there will be a landslide. And I think Gregory Peck, and he'll come riding out. He will not want gold. He will keep on telling them, don't go, it is dangerous, dangerous. But they will go, and all of them will perish in that. Though they'll be buried in the gold. They will be buried with the gold. Whereas Gregory Peck alone, he will ride out of the place with the heroine. When they come out in the last scene, if you watch that scene in the YouTube, you know what you do? You go to the end of the movie and watch only the last scene. In the saddlebag, you know, he'll put his hand and take it out. Gold dust will be there. So the point is, my father used to advise me and say, you know, after the movie, we used to come back in the scooter, Lambretta scooter. He will, while coming in the evening, the evenings, the night show, he will tell, Srikanth, what did you learn from this? So, I don't know. Then he said, don't be greedy. See, the man who did not want, he got it. The men who are greedy, they lost everything. So don't be greedy. Don't expect any result from what you do. That way, my father used to teach me Bhagavad Gita also. Don't expect any result. Do your duty. What has to come to you will come. Okay. So I know this may not be relevant to you, but still I thought I will make this point. My father is 87 years old now. He is a member of the Institute of Chartered Accountants of India. Very senior member. He's of course practicing, but very aged, but still he's an advisory rules. So now, accounts of companies. Here I'll be rushing a little because many of these things are theory. Many of this topic, many are theory. Now, if you have any doubts relating to dividend, Sir, cum dividend is not relevant for you in law, sir. In law, I don't think you will get any question, but I will explain it once. I will explain it once for Mr. Shubhankar Das. I'll explain. Dividend has been declared by the company now. When we declare the dividend, we will say, along with that dividend, we will announce a record date, which is what my friend Malappa is calling as X date. Mr. Malappa is calling it as, Jadar is calling it as X date. Now the X date or record date, whoever name is appearing on that date will get dividend. Now, the share will be traded continuously now. There will be no stoppage. So 2 to 3 days before the record date, which is announced, we are trading in this share. I'm buying from you. Now what happened? The price of the share, the market price of the share is 250 rupees. But dividend per share is 10 rupees. Example. Dividend per share is 10 rupees. Now, I am going to buy it from you today. Now, within 48 hours, my name will come there. That means that 10 rupees I will get. 250 I paid you. If I sell in the market, minimum I'll get the 250 plus this 10 rupees also I'll get. Now, what you will tell me, sir, I only kept that share till today. So I am only entitled to the dividend. So you have to give me the 10 rupees. I said, sure, take it. So what I will do, I will give you instead of 250 rupees, I'll give you 260 rupees. That is called cum div. So the 10 rupees is dividend, 250 is price of share. In accounting, it is very important. Here, it is not important. In accounting, it is important because while accounting the cost of acquisition, I should take 250. Because in the price, it won't be 250, 260, 60, like 10 like that. The broker's note will say only 260. So out of that 260, 10 rupees you have to remove and take it to income. And 250 you have to take it to cost for the seller. For the buyer, 250 is the, price, and 10 rupees is only the dividend you paid. For the seller, 10 rupees is income. Only 250 is the cost. Right? As far as buyer is concerned, 260 bars. I paid you 260. Got it. Now what will happen now? That 10 rupees I will take it, keep it separately. Dividend receivable. Later on, record date, my name is there now. Dividend will be paid now. At that time, I will adjust this amount. This 10 rupees I will get from the company now. At that time, I will reverse it and close it. Because I paid that 10 rupees to you. Getting it from the company, then gone. Got it? Now, record date is over. Next day, I am selling. Obviously, the 260 rate will no longer be applicable. Cum div won't be there. It will be only ex div. 250 back to 250 or whatever it is. That is called ex div. That is why this record date is also known as ex date. After which the share will be quoted at ex div price only. Okay. So Shubhankarji, I hope you got some idea of this. Yeah. Very interesting. You see, once you start getting into the conceptual basis of the subject now, you will not only get marks in the exam, rank, etc. You will also become a full-fledged professional. Rather than, a university level approach where, you don't understand what you're reading, exam point of view. Yes, with all this, you can have exam point of view. Again, telling you, you can acquire knowledge and also get very high mark in the exam. Don't think that they are mutually exclusive. The man who has the conceptual or the lady who has the conceptual basis will write more clear answers. As against somebody who doesn't understand or maybe understands partially, mugs up, goes to coaching class, listens, doesn't understand, but sure, then I've done that also for maths. With all this conceptual background, believe me, maths was my bugbear. Friend, suppose I had been good in maths, boss, I had been IIT Kharagpur, yeah, straight away going to IIM. Only reason why Srikanth came to CA not because father CA. So of course, one reason, but maths. So I come and sit here, of course, which is one of the reasons why still some of you will be brilliant in accounting. You will be big shots in accounting. I am weak because I cannot, your numbers are my danger. You'll be very surprised how I got rank. I struggled. Just like for some people, no, English, writing, language is a problem. For some people like me, numbers is a problem. So I have to work more on numbers. So which means when you work out an accounting problem once, on that same point, I will work out 10 problems. So that after the 10th problem, conceptually, I'll be ready. I'll be knowing what it is. but it will take me 10 problems. For a brilliant person like you, it will take only 2 problems. For me, it will take 10 problems. So work a little more. Then work. Same way, if you think, sir, I'm not able to remember, or like that, some people will tell. Read 2 times, read 3 times, take notes. As you are listening to me, if you are having a paper and pen and writing down quick notes, that itself will help you remember. That is, if you're attending, if you're listening to my lecture, okay, don't copy from the slide. As I'm telling, salient point you write in notes, quick notes, notes taking, that helps you in theories of things. Salient point, up to you. Thank you, Pooja Gupta ji, for agreeing that I have experience and knowledge. Though experience is one thing. My wife, even now, she doesn't agree. She'll keep on asking, you are telling you are a chartered accountant, blah, blah. How you are, don't even have basic knowledge like that, she will tell me. That is true. Okay. This is the basic topic. Today, I am going to only cover important points. Important is, according to me, one important topic that is very interesting is reopening and recasting. Voluntary revision. These two are very important. Okay. I'm going to little bit teach you that. Others also will do. So every company should have books of account and books and papers. The books shall be kept on accrual basis according to double entry system of accounting. Hey, all this you know, yeah. If I tell you all this, they'll become like Mullah Nasruddin. He went to the mosque. He asked the people, do you know what I'm going to teach today? They said, we don't know. So you people don't know anything like that. He went away. Then he went the next week and he asked them, do you know what I'm going to tell? They called him again. Do you know what I'm going to teach you? No, we know, man, we know. Hey, you people know everything, what I can teach you. So in my case, it's like that. You people know everything. What can I teach you? Next week also they called. He goes, so do you know? Some people said, I don't know. Some people said, I know. He said, those who know, tell those who don't know. Like that. That is Mullah Nasruddin. I cannot afford to do that. But it's still, I'm sure you are not unfamiliar with this. So straightforward point. Book and paper and all. What is important is the books of account shall be kept at the registered office of the company. Now, you want to hold it at such other place in India. For example, your registered office is in the factory in Bhavra district in Madhya Pradesh. You are in Bhavra, proper Bhavra mein. Your head office, because the factory is the huge factory. Is there where you manufacture, and your registered office is there. But for all, because possibly your MD was born there and he had huge land there, therefore they set up the factory. First factory he set up there, then maybe he would have expanded to Sanand, he would have gone, even you have come down to Tamil Nadu where he would have set up one more plant. Whatever it is, your registered office is in Bhavra. But for all intents and purposes, your corporate office is in Mumbai, because Mumbai is the central control. Therefore, you're going to keep the books of account in Mumbai. Correct. Because Mumbai is corporate office where finance people, because you hire suppose you become a chartered accountant and this company is hiring you, and then in the interview they say, you have to work from Bhavra in Madhya Pradesh. You may go. If you like, if you are from MP, you will go, or if you like the place, you will go. But some people may say, no, sir, I'm from Mumbai. I would like to work from Mumbai only. So kindly give me the job in Mumbai. So, okay, we have a corporate office in Mumbai. The entire finance team can sit in Mumbai. Then the books of account also should be only in Mumbai. Then what they should do, the board of directors should pass a resolution and say the financial books of account will be maintained in corporate office at Mumbai, Mulund, Mumbai. No problem. Okay. In such a case, the company shall, within 7 days, file with the registrar a notice in writing giving the full address of that place. Okay. Books of account of a branch office may be kept at that office. Okay. So you might be having many branches. Now each branch will have its own books of account in that branch. But every branch should send summarized returns to the company. Books of account may be kept in electronic mode. See, they said, books can be maintained in any form, whether in paper or in electronic. See, today, all companies have maintaining books of account in electronic form. In fact, going beyond books of account in electronic form, all data is now on electronic form in ERP. Either we use Oracle or SAP or whatever, you have your own in-house as ERP, whatever. And one of the modules in the ERP would be finance module. And one of the output of that finance module is the financial accounting. Understand? So the overall, so today, if you want to become an expert in finance, you should also be an expert in SAP or ERP, because you've gone out the days when your data came, you punched the data and all. No. Today, the data is going to be seamlessly coming from your main business. So the business will generate the data. Out of that, you will be pulling out finance data. So the purchase orders, from the purchase order, you will come to the invoice, payment, all that. Similarly, customer order, invoice, DC, then GST, all that will come directly from the ERP. Okay. So you should have access there. I'm just giving this example to you. So with such advanced electronic digitalized systems, books of account cannot be maintained manually. And even asking for printout is joke, comedy. If some auditor is going to come and to the company and say, please print out your general ledger and give. Boss, do you know what my general ledger printout will be? One room, it will be paper. You want that? Rather, what I will do, I will give you password, user ID password with view access to the SAP. Go there, or finance module alone, I'll give you. If you want any specific report, you tell. We will ask our IT team to define it. Sometimes when I go to the company, I ask the IT team, I meet the IT team and I tell them, boss, I need this report, this report, this report. Can you get it for me? They will give it. So I will view it. In addition to that, we will do audit through the computer only. No way we are going to do it manually. Gone. No tick, only click. Okay. This is not now. I became a certified information systems auditor in 2001, CISA. Well, even before that, 1998, your computer, accounting system on computer was there. So it is there is today if a person says I want printout manual and all, little bit jokeable. So, but the MCA also agrees, and they agree that the accounts may be in electronic mode. The only condition they say is it should be accessible in India, because sometimes you might be hiring space on a foreign server, whatever it is. So they also say that it should be retained completely in the format in which they were originally generated. I don't know what they are trying to say here. But one thing is clear, they are afraid that there should not be any fraud. Anyway, so this is electronic form. No. So it will be very interesting. So they're also insisting that backup of all the data should be kept on servers physically located in India. So that means what? You should have mirror server in India, which is costly. Right? But anyway, it's a good thing to have one server and one mirrored server in India. Like that. I'm not seeing. Now, this is an important point. Any director of the company is entitled to inspect the books of account of the company. Can a shareholder, that is a member, inspect the books of account? No. Member of a company cannot inspect the books of account. But director can, because he is engaged in even a non-whole-time director or a whole-time director may inspect. Okay. Where financial information is outside India, he can ask for copies of the same. Inspection shall be done during business hours at the registered place or such other place where the books of account are. When an inspection is made by a director, the employees and officers should give full cooperation making such inspection, all assistance, etc. Inspection in respect of any subsidiary of the company shall be done only by the person authorized in this behalf by a resolution of board of directors. What does this mean? It means you are a director of the holding company. You have no right to access the subsidiary books. Only the holding books you can ask. If the subsidiary is to be seen, then you have to be authorized by the board of the holding company. Okay. Board of the holding company. Be careful. Right? Where a director seeks financial information kept outside India, he shall make a specific written request. I have highlighted that. Written request. And the request for such financial information shall be made by the director himself and not by or through his power of attorney, holder, or agent. Such financial information shall be provided within 15 days. So, for foreign information, you should make a written request. Locally, you can do either on you yourself or you can even deploy somebody for that. Okay. But for foreign information, you have to make specific request in writing by the director himself. Now, based on that, 3 marks question. One of the directors of Suryodaya Pharma Limited has sent a request for inspection of the books of account. The CFO of the company refuses to provide access on the grounds that the director will be provided with the quarterly summary of financial position at the board meeting. Wow! Wonderful CFO. I love him. Advise the board of the company as to whether the action taken by the CFO is correct. Will your answer be different if the request is made by a shareholder? The answer is, see, this 3 marks, but still go for my 4-step process. If bluntly you write, the CFO is not correct, you will get half a mark. So you have to write the issue, you have to write the books of account of a company maintained within India shall be open for inspection by a director. Where an inspection is made by the directors aforesaid, the officers and employees shall give the person all assistance. Okay, got it? Then you say, in the light of this provision, the action taken by the CFO is not correct. That's all. Will your answer be different? Yes. Shareholder has not got any right to inspect the books, only director. Therefore, such a request by shareholder, the CFO would be well within his right to say, for shareholder, we might give quarterly summary. For a listed company, we will give interim also, interim financial statements also. Anyway, you will be seeing the financial balance sheet P&L audited now. Wait, you are only shareholder. If every shareholder had to give every time he asks, then I can't run my business as I'll be only providing information to you. 1, 2, there's a question of some amount of business secret also is there. Of course, having said that, listed company, almost all the information is available to the public. There's very little information which is secret. For example, if the board has decided to sell one unit, it can be secret only till the board meeting. Within, I think, so many minutes of that, it has to be informed to the SEBI and stock exchanges. Thereafter, it will become straight away, it will go to the, the Reuters board, like that, the running news, it will go. Immediately based on that, the share price will go up, down and up. Boss, the fellow is not even sold. Yeah, he is thinking of selling. The board has told we are going to sell, that's all. Immediately price will go up or down. Some nonsense will happen to that share. Mr. Aditya Ram, Director of Suntech Infosystems, which has an office in Seattle, USA, demands certain financial information relating to the Seattle operations over phone. Agreed. He wants some information about this. But how has he done it? Over phone. Sorry, it should be specifically in writing. Suppose written request is sent by his advocate. No, it should be done by himself. See, here again, you write these 2 lines, right? And then give the answer. So, A 2 lines, B 2 lines, totally 4 lines, 2 marks. If you write, you will get either 2 or 1.5. That is how you have to improve your run rate. Every question you have to get so many marks. Which is why many times when I walked out of the exam hall, by and large, I will know where I am. By and large. From the question paper, I would give myself. By and large, I'll be a little conservative, I'll be a little negative, and I will say, I will devalue myself. Still, I will get 50 plus. So I'll go off. Sometimes, some papers, I was so confident that I myself gave 65. Of course, the result I got was 70, 67, 70. In ACS, I think costing, I got 89. So ACS is pretty simple costing here. There's nothing. You'll be laughing if you see the paper. So the point I'm trying to make is, I'm not trying to boast here. I'm only saying it is a system. It is a process. You have to do it. The way you write is very important. The presentation is very important. Okay, whether you like it or not. See, you may not like it, but still, that is unfortunate. I don't like many things in my life. Put up with it. In spite of that, only we have to succeed. If you change everything, if you say all this is changed, I will also get a rank. Nothing is going to change. Within this unchanging universe, you have to change. The only thing you can change is yourself. Nothing will change. You can change. The minute you change, everything will change. This is the 58-year-old man I have experienced it in my life. When I changed, my world changed. When I wanted the world to change, nothing will change. You will only get frustration. Nobody will do anything for you, sir. Nobody will do anything for you. Even your parents marvel. Yeah. And don't put too much pressure on them also. They can handle. Say, after all, that your mother is alive. She needs a life of her own. The father needs a life of his own. Nah? Your life. Live your life independently. There is a secret of success. Be independent. Don't depend on anybody. Slowly remove the dependence on people. By around 25, you be totally independent. Then start giving to people. Start giving. Give. Don't take. Give. See how joyful your life will be after that. Keep on giving. Not just money, time, advice, or whatever. Whatever you can give. Then you will not be dependent on people. If they are dependent on you also, don't worry. Don't be so proud that, that fellow, without me, you won't do. Not like that. Just give. Okay. So, this is just a suggestion. In the Isavasya Upanishad, it says, Esavasyam idam jagati yatkincha jagatyam jagat. Tena bunchita. Tena bunchita. You enjoy by giving, not by taking. Okay. The more you take, the more you become dependent on people, and the more without them, you cannot live. That is the problem. Okay. Chal, moving on. Preservation of books of account. Books of account should be preserved for not less than 8 financial years. Okay, sir, my company was formed only 4 years ago. Okay, you should be preserved for all the immediately preceding financial years. That's all. 4 years you prepare, 8 years. So 9th year, you remove the first year. But again, what I do, generally I advise my clients, though 8 years and all, I say 10 years, safe side. And keep it for 10 years. So that when the 10th year is over, or the 11th year is over, we will remove the first year. So on and so. So at any time, 10 years ka books. But in case an investigation has been ordered, then so long as the central government directs, you have to preserve the books. I'm going to now skip a little. Because all this is simple. What is financial statement? Who need not? See, one more thing. This is a clear overlap with accounting, financial reporting. All this is auditing. It's a clear overlap. What do I get out of that? What is the logic I get out of that now? When I am studying, not me, I already finished now. When you are studying financial reporting, remember company law. When you are studying auditing, remember company law. So you don't have to study again for it's one time. It's like a subroutine. Call it whenever you want, wherever you want. That way you want. No, sir, I'm not studying company audit of companies in company law in auditing, sir. Well, same thing what you studied in company law only will come there. Same thing, a little more elaborate. No problem. Now, the financial statement should give a true and fair view and all that. See, what is true and fair view? In auditing, you would have studied pages and pages on what is true and fair view and all, right? Also, financial statements of every financial year shall be laid before the company at every annual general meeting. Now, sir, you never have a doubt whether it is financial year or calendar year. Why? Because if you should not ever have this doubt anymore, nobody has to tell you this. By seeing the provision, you decide. If it says financial year, it is financial year. If it says year, nothing year, no prefix, then it is calendar year. That's all. You will study it in general classes, but now I'm telling you. So you don't have to ask anybody. Srikant is not needed. God is not needed at one stage. That's what Krishna says in chapter 5. So Arjuna, he says, Arjun, even you don't need me. That is, those 2 verses of 5th chapter, Sannyas Yoga, are one of the most controversial. Yeah. And that is why we say Buddha was an avatar of Vishnu. See, he came finally to tell, you don't need even me. Okay. But the point is, You don't need this teacher to tell you whether it is financial year or calendar year. How to find out? If it says sirf year, nothing before that, then it is calendar year. If they want a financial year, they will say financial year. Okay. So now you are clear, na? You will never make this doubt again. Chal. Now, financial year ka definition, we already saw in AGM, na? The AGM date was linked to the end of the financial year. Correct? So the AGM should be held within three conditions for AGM. One was the AGM should be held within 6 months from the end of the financial year. They clearly told you financial year. What is the financial year? Uniform financial year. The period ending on 31st day of March every year. So, where a company is incorporated on, we already saw this. In AGM, we saw this. Where a company is incorporated on or after the first day of January, then financial year is the period ending on the 31st day of the following year. Okay. We already saw this. That's why I'm not. I taught you this in AGM. And who should authenticate? Authentication means signing. Signing. So, beauty is even with all your digital signature, today, the balance sheet of a company is still signed. So myself and my partners, we have five, myself plus 6 partners, we all sign. So in peak season, signing. Of course, UDIN is also there. So very big control. We should thank the Institute of Chartered Accountants of India for giving us this great UDIN, because the UDIN protects you, me. The UDIN is in my control. So when the directors authenticate the financial statement and then they send it to the auditor for certification. I don't sign unless they sign. Right? Why? Because, we'll come to that. When I come to auditing, I'll tell you this. Who should sign? In case chairperson is there, he will sign. Only chairperson will sign, along with company secretary and CFO. In case there is no chairperson, then 2 directors, out of which one shall be MD. Also, if CEO is there, CEO should sign. If CFO is there, CFO should sign. If company secretary is there, company secretary should sign. In case of one person company, it is sufficient if only one director signs. Right, sir? So, Altar Limited has on its board 4 directors, namely W, X, Y, and Z. In addition, the company has Mr. D as the managing director. The company also has a full-time company secretary, Mr. Weiss. Wow. Man, Weiss. On its roles. The financial statements, in fact, sometimes I say you are Weiss, I am otherwise. The financial statements of the company for the year ended 31st March 2022 were authenticated by 2 of the directors, Mr. X and Y. Is it correct? No, because where chairman is not signing, chairperson is not signing, 2 directors can sign. But one of them shall be MD. Also, company secretary is there. That man also should sign. So, it will be not correct. The authentication is wrong. What would be your answer in case the company is a OPC? Has only one director. One director can authorize. Okay. See, this is a question asked in the examination. Simple questions. 2 marks, 3 marks. Just like that, you can pick it up and go. Okay. The board of directors of Vishwakarma Electronics Limited consists of Ghanshyam, Mr. Haidar, and Mr. Indersen, managing director. The company has also employed a full-time company secretary. See, same question, same concept. The P&L account and balance sheet was signed by Ghanshyam and Haidar. Indersen also should sign, yeah. And company secretary should also sign. That's all. See, the same theme. In fact, in the first edition of my book, at the end of every chapter, I gave the exam questions. Then in the second edition of my book for final, I used to give the exam question analyzed under each topic. Meaning, under directors, under additional director, I will give the questions asked in the exam relating to additional director. Possibly, I was the first man who did this analysis, not just topic-wise, but subtopic-wise. So that the student, as they are studying, they will know on this topic how many questions have been asked. And with the answer I'll give. Sometimes if it is a pure theory, I'll say refer to the point, subclass. I used to number the paragraphs. So which is the answer like that. I can't keep on repeating and see if I keep on repeating, the book will become so bulky and students will feel discouraged. So my book used to be reasonably thick. Now it's out of print. I have some few copies with me in my library, which I am the only copies to my knowledge. Anyway. Manner of circulation of financial statements. See, financial statements are to be sent not less than 21 days before the date of the meeting. If the copies are sent less than 21 days, then they shall, notwithstanding that fact, be deemed to have been duly sent if agreed to by the number of members. So remember, your notice for AGM should be spent not less than 21 clear days before the date. Now, the financial statement also should be sent not less than 21 days. Okay, sir. I'm not able to send it, sir. What to do? There you had lower, you had an opportunity now. If 95% agreed, I can give shorter notice. Like that, is there any such provision here, sir? Yes, it is there. If you are going to send it less than 21 days before the date, then you should get it the consent of the members. In the case of company having share capital by a majority in number representing not less than 95% in value. Do you remember? Same. Majority in number entitled to vote representing not less than 95%. See, when we say majority in number, differential voting right equity shares also will be counted in number. Okay. Again, for value also, they'll be taken. Only at the time of voting, this fellow will get half vote. That's all. In the case of company not having share capital, members having not less than 95% of the total voting power. Right. So this is again an example. No, I think time is also an issue. I'm going to do this reopening and then stop. Say reopening of accounts on courts or tribunals orders. Okay, or else what we can do, I think only we can cover this topic. Auditing we'll do in the next topic indeed. Because I need to cover CSR also. I need to talk about CSR also. Okay. So today there will be no break also. Another 15 minutes, I'll complete this topic, 15 to 20 minutes. Then again, 10 minutes, we'll have question answer. I don't think I can cover auditing today. See, what action can be taken against unpaid dividend stage company? Penal action is there, sir. See, I'm not covering the penal provision in this slide. There are heavy penal provisions, including imprisonment for non-payment of dividend. Imprisonment, because that's not your money. So, Mr. Mallappa, these lectures are not meant to be comprehensive. They are meant to be revisionary or thin. So, my humble request, you can go through my longer video. There's a full dividend and declared. There, I would have clearly covered the penal provision as to what will be the consequence of action. I don't have the slide here with me, so I don't remember from memory, but it is there and it has been covered in the main video. A very, very stiff penalty. But that's it. You go and complain to the ministry, that's all, and tell them that you are not received dividend. Very stiff, not easy. You declare. See, the idea is simple. If you don't declare dividend, nobody's problem. Nobody can force you to declare a dividend. But if you have declared the dividend and not paid, you're in deep shit. Not only that, there are many, many other things that will happen. For example, that the directors, so for 1 year, the dividend declared has not been paid. On the expiry of 1 year, the directors, who will get disqualified. All this will come in the final exam. If you, in case you have not paid the dividend once declared, for 1 year, the lapse is there. Then after 1 year, all the directors will get disqualified. They cannot be reappointed as directors in any other company. All sorts of nonsense will happen. So heavy penalties are there. So you please kindly listen to my longer lecture or refer to the penal provision given in the study material. In addition to that, there are other penalties also, as I said. If you don't pay the dividend, then differential voting right share you cannot give. That so many things you cannot do once you are defaulting dividend. So to my knowledge, I have not heard of any company defaulting in payment of dividend once declared. And for listed companies, it's even tougher. The share price will simply collapse, and company unable to pay dividend on declaration. So no promoter will take that risk. Okay, to my knowledge. So now there are some cases where reopening of accounts. See what has happened. Past year's accounts have been audited, have been authenticated and audited. Thereafter, these accounts have to be they are seeing. Then they find that there is some mistake. Or maybe the income tax department is saying we will add or whatever it is. Now you want to reopen the accounts, revise them, and recast them. It has already been laid at an AGM and approved. Is it possible? Yes. Earlier, there was no provision for this. Only 2013 Act has given the concept of reopening. This section 130 deals with reopening of accounts on courts or tribunal order. The company board of directors cannot take that call. Okay? Only tribunal or court can take the call. Order of reopening shall not be made in respect of reopening of books of account relating to a period earlier than 8 financial years. So, maximum you can go back only 8 because only 8 financial years ka books will be there. Otherwise, books of account will not be there. Okay? Or in the case of where the CG is doing investigation, longer period. So, what is the procedure now? Any one of these authorities can make an application. CG, SEBI, any other person, IT authorities, statutory regulatory body, whomever. See, mainly SEBI is given this power. You know why this whole provision is there? This is a knee-jerk reaction to Satyam. What happened? Our friend Ramalinga Raju, he completely falsified the books of Satyam. The accounts of Satyam were totally falsified. Now, he himself confesses that for the last 3-4 years, he has been doing it, which means 4 years of accounts are false, based on which dividend has been paid, blah, 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 tax has been paid, everything has been done. Whatever. Now, when SEBI, the fraud was discovered, the first thing that SEBI wanted to do was to reopen the accounts and revise them. There was no provision in the Companies Act for that. So they had to get specific order from the High Courts and specific order. So then they realized, hey, let's make a provision for it in the Act itself. And they said, yes. So you can make an application to the court or tribunal under this section. There was no specific provision. So even the court does not know on which section should I order, which provision should I order like. But the accounts had to be revised for income, everything, all purposes. So at that time, they solved it on an ad hoc basis. But thereafter, they made it law. Whenever an application is made, the court or tribunal will hear the case and they are satisfied that the accounts are false or thing. When can it be done? Only when the relevant earlier accounts were prepared in a fraudulent manner. Fraudulent. See, this is a clear Satyam reaction. Or the affairs of the company were mismanaged, casting a doubt on reliability of accounts. This is specifically for Mr. Ramalinga Raju. After Ramalinga Raju, to my knowledge, no other company would have had such a problem. No other auditor would have had the guts to do it. Okay. So, suppose you see, small companies, there might be some, I tell you, it cannot be done so easily. Because earlier, there were no check or balance. Companies used to give one account for bank, one account for this. Today, no way. Everything is online. Everybody can see the same. Well, believe me, this income tax return being online, MCA being online, is a great boon for auditors. Today, the client himself cannot put pressure on us. If he says, "Boss," I'll ask him, "Look here, whom are you trying to cheat? If I give you something now, you will go. Thereafter, what will happen? It will be the GST sales will be there now. Bank transactions are there now. All that is not don't do all this. Prepare the accounts as per the transactions, bring it to me, I will audit." So they also know that fraud cannot be done that way. Ramalinga Raju was the last possible exception when I think. And of course, the auditor also has to be honest and ethical. Anyway, honesty and ethics are very important. Nothing is worth the compromise of your honor and dignity. No amount of the Benz car or the Cadillac. It is not worth. If your honor and integrity are going to be compromised, no amount of money is worth it. Shame if you do that. Okay. Take representation into consideration, if any, and then pass an order for revising or recasting accounts. So, this is one thing. Similarly, you have voluntary revision under 131, where the board of directors, where it appears to the directors that the board has not complied with 129 or 134, then you can revise your financial statement or board report for the last 3 financial years. See, to err is human. Nobody is perfect. Perfection is given to God alone. So you have made a mistake, boss. Even the auditor mislooked it. I tell you, this is shame. Again, a shame. What was happening? What audit was being done? What you are doing? The mistake. Huh? Okay, you have made a mistake. You want to revise it. You can do it. For 3 preceding financial years, you have to apply to the tribunal for prior approval. And then the tribunal will give notice to central government and the income tax authorities. And then the revised accounts will be filed. Believe me, 131 is a shame because so much effort is taken in an audit. Finance professionals are there. You're all studying and coming. Who can make all these mistakes? So such revised financial statement or report shall not be prepared or filed more than once in a financial year. So once you're allowed to do for a financial year, after that you cannot. See, again, confusion. More than once in a financial year. That means in one financial year, you can revise only once. But for one financial year, can I revise more than once? I don't know. If you ask me, I don't know. I don't understand. See, 22 March accounts, I can revise. So in the financial year 23-24, I can do only once revision. But again in 24-25, can I revise 22 March again? I think I can. Because here they are saying more than once in a financial year, not for a financial year. Right? See? So that unfortunately, it is very difficult. So I want to also quickly talk about NFRA. See, NFRA is a new body. It's not very new, 2018. But again, NFRA was there very much before Satyam. But post Satyam, NFRA has been given more sharp nails and teeth. And it's like a Rakshas, meant to, any auditor does anything immediately, like Narasimha, they will come and tear him up. And yatha hi dharmasya glanirvavati bharata vyukthanam adharmasya. So that the NFRA will come and they will become the thing. So that is he's an independent regulator of the auditing profession and improve the transparency and reliability of the financial statements. Good. Okay. So the NFRA has been created. We welcome NFRA. Please come and monitor. Let us hope that the NFRA will protect the investors from their own greed and ignorance. One thing that SEBI, NFRA, everybody should do is, MCA should do is, make the investor read the balance sheet and P&L account first. Of course, as part of the investor association activities, now I have addressed MCA investor education program, wherein the MCA will conduct. Are you aware? The MCA is one of the bodies which conducts investor education and awareness program. If you go through my long lecture on IEPF and all, I would have told you about, the IEPF, one of the activities that the investor education fund does is conduct investor education awareness programs, which is usually done by associations. Like TAA was a registered association with SEBI. So we used to do for SEBI. And MCA also is a registered association with SEBI. And they used to do it. And budget is there, we'll invite people and they will come and they will invite speakers like me to come and talk. So I used to again and again say, read the balance sheet, read the balance sheet. No, we won't read the balance sheet. Because you auditors are all fraud. Tell you, it's your choice. It's your money, your choice, go. I have done my job. I have qualified. I have given notes on accounts. I have explained it to you. Okay. Now, listed company. So who are all controlled by NFRA, listed company, an unlisted public company having paid up capital. PUC means paid up capital, not pre-university certificate. Paid up capital greater than or equal to 500 crores. Turnover greater than or equal to 1,000 crores. Any one condition is satisfied, you are there. Either paid up capital more than 500 crore or turnover more than 1,000 crore. Or outstanding loans, debentures and deposits greater than or equal to 500 crore as on 31st March in the previous financial year. PFY means previous financial year. Right? Insurance companies, banking companies, companies engaged in the generation of supply of electricity, bodies corporate, or companies referred by central government to NFRA in public interest. Finally, bodies corporate registered outside India, which are subsidiary or associate of A to D. So any of these people, they have a foreign subsidiary or associate, that also will be coming under NFRA. NFRA is a longer topic. I'm only giving which are covered so that you will know. Sometimes the question could come here, but powers of NFRA are there. NFRA can get into disciplinary proceeding. They can take action against chartered accountants, auditing firms. Heavy, I told you, nails and teeth and ferocious body, ferocious God. It's meant to protect the investors from unscrupulous chartered accountants. Please do it. Okay. Now, lastly, corporate social responsibility. It's a huge topic. All I'm going to talk about is very simple. Which are the companies required to constitute CSR? Every company having net worth of 500 crore or more, or turnover of 1,000 crore or more, or net profit of rupees 5 crore or more. So even if one condition is satisfied, you have to constitute a CSR committee. If in during the immediately preceding financial year, your net worth crossed 500, or turnover crossed 1,000 crore, or net profit 5 crore or more, then you shall constitute a corporate social CSR committee of the board consisting of 3 or more directors, out of which at least one director shall be an independent director. But if in your company's case, you don't have to have independent, see, which are the companies required to have independent directors is also there. So if you are not a company requiring independent director, then there is no need for an independent director. There should be only 2 directors. Okay. Profit should be calculated. For CSR purposes, profit from overseas branch need not be taken. The logic is, if you go through what can be done as CSR and prohibition on CSR, you will find you cannot do CSR work outside India. Okay, which are all not CSR, you will find any amount which is spent outside the country is not CSR. Okay. So they obviously say, okay, if you're earning money outside India, don't include it here. Similarly, dividend which is received from other companies which are complying with Section 135, that is CSR. So that company has already contributed for CSR and declaring dividend to you. You are a shareholder there. So that dividend, out of that dividend, you need not do further CSR, right? So one type of question they ask you is whether this company should constitute a CSR committee. Once a company has to constitute a CSR committee, then it has to transfer the percentage to be transferred. Whenever a company has to constitute a CSR committee, then such company should spend in every financial year at least 2% of the average net profits of 3 immediately preceding financial years. So you have to calculate average net profits of 3 immediately preceding financial years, average. Then calculate 2%. That amount you have to spend every year as CSR. Okay. One thing you can do is, instead of spending it in 1 year, you can reserve it for in a multi-year project, ongoing project. In which case, even if you don't spend it in this year, it's okay. But maximum you should spend it within 3 years. See, this is similar to your Section 12 exemption, 11, okay, under the Income Tax Act, where you are allowed to accumulate 5 years, 10 years and all. In which case, you should spend it within that 5 or 10 years. See, nothing wrong, because you might want to build capacity, you might want to build a hospital. In which case, you don't want to do it in 1 year. So it will take you 3 years, medical center. So you will start now, then 3rd year you will complete it. So it will be counted. Each year will be counted. Even if you don't spend it this year, it is okay. It will accumulate and come. At the end of the 3rd year or whichever year the project should get over, you should have spent that amount. Got it? In case you don't spend it. Okay. See here, Tirupati Limited, a listed company, has made the following profits. Now you have to take 2%. So it's simple. You have to take the immediately preceding 23, 22, 21. Total. Divide by 3, 50. 22% of B is 1 crore. So 1 crore should be spent this year. Boss, this is nothing. There are companies which have to spend 200 crore and all. Because they got huge profits. Huge. CSR is huge. In case the CSR amount is not spent, then what happens? The board should report, and that unspent amount should be transferred within a period of 6 months of the expiry of the financial year to a fund specified in Schedule 7. Just like IEPF, they have a CSR fund, out of which the central government will do. If you don't know how to spend it, you give it to me, I will spend it, is what they are saying. Suppose there is a surplus, then that should not be added to the business profit. It should be plowed back into the same project and should be transferred to the, in case you are not able to spend it, then it should be transferred to the unspent CSR. Got it? When you will get surplus, suppose you are doing social marketing or some activity where you are selling something. For example, tribals are there. You are encouraging the tribals to create artifacts. These are sold by a showroom run by you, the CSR or NGO, wherein they are generating some surplus. Now that surplus should be used for helping out these Adivasis or these tribals. Or you should give it to the government. That's all. Okay. Friends, this NGO is a specialized activity. I'm not joking. I have been for easily 17 to 18 years. I have worked extensively with NGOs as an auditor, including the Indian Network for People Living with HIV/AIDS. Nearly 15 years I've been with them. Believe me, I know how much I have. See, it's a very, very personal bonding for me. I have traveled all over the country, right up to Mokukchung in Nagaland, Babra in Madhya Pradesh. Every place I have walked and I have met people and I have interacted with them. Also, I have visited for Child Welfare Association, national level body, huge fund. They help children. I have visited each village, including remote villages in Gudalur district. I have walked into the forest where elephants are. You can see the elephant walking and you will walk. You can't go by jeep. To a certain point, you can only walk. And you have to be, I've walked into those, I've seen bison grazing. Okay. In the forest, casually. They won't do anything if you don't do anything. And I have worked with these tribal children. I've seen this. As an auditor, my job was not, I had to go there and see whether they have actually set up the study center, whether the children come in the evening and study. Whatever. What I'm trying to tell you is CSR is a very beautiful thing, giving back to society, but it has to be done properly. And for that, you need specialized people. Companies are not competent. NGOs are there who know the in and out of it. That is why the CSR fund can be given to an organization which is specializing in it. Okay. So what I'm trying to tell you is this is an ocean of a subject. But we have come to almost an end of the evening and I've still not been able to cover auditing. But it is okay. It's okay. Now, with about 5 minutes to go, I'm going to stop sharing and I'm going to open up for any questions. Now I will see the chat. In case any questions are there in the chat. See, Rishabh Jain is asking finalized or approved. What do you mean? Which dividend? It is finalized and recommended. Dividend is recommended. Yes, Madam Shraddha is also making a valid point. The English should be legible and it should be, and the keywords are important. For example, special resolution, you write it in capital or underline. So that is what we are looking for. Do you know that this requires a special resolution? Do you know average 2% of the average profits of the immediately preceding 3 years? For that, you will get marks. Okay. It's a good point that Madam is making. And I also agree with what she's saying here. Yeah, no short forms, correct. Full sentences. Which is where, if you can download some of these PowerPoints, which are prepared by the faculty, and in addition to that, the faculty of Board of Studies have prepared study aids. Kindly, they are simplified diagrammatic representation of the subject. They can help in remembering also. It's available in the BOS website. I've gone through it. It is very good. But you cannot reproduce that in the exam. No. You should use it to remember and then write full sentences like that. That you have to practice. Little bit of writing practice will also be good. Take some of the older question papers and write it and see how you are faring. You correct yourself. Take the guideline answers or suggested answers and you see. You yourself correct. Then you will know where you are. Yes. आज तो I could not cover auditing. It's okay. Aram se we'll do it. The idea is that you should get a fairly good understanding of the totality of the topic. And then you also go through the videos, you go through the support material in the BOS website. Study material, of course, is going to be your base. So read the study material once at least fully before the exam. Once you should read. So means every day you should spend 1 to 1.5 hours on preparation for this subject. Right. So thank you. Any other questions? Shraddha ji, you would like to add something? Anything? No, whatever. Anybody wants to add or ask question? Thank you very much for a wonderful interactive session. Looking forward to similar sessions going forward, inshallah. Thank you. Bye. Nisarg ji.